Okay, good. So let's go ahead and let's start out our discussion by talking about the reconciliation from the individual fund balance for the individual governmental funds down up to the government-wide financial statements. So if I purchase it turns out that there's two reconciliations that we're going to be looking at, okay, but let's just look at one of the reconciliations here. Let's start out by contemplating a transaction. If I purchase equipment and I purchase that equipment out of the general fund, what's the journal entry in the general fund to purchase the equipment? Purchase equipment out of the general fund. Good. Going to debit expenditure. Say we're paying $1,000 for this, whatever, and credit cash, right? Okay, good. Now, I'm also going to want to account for that transaction at the government-wide level, right? So what journal would I make at the government-wide level if I was purchasing this equipment? Now I'm going to debit equipment, which I'm going to abbreviate as EQ, for $1,000 in credit cash, right? Okay, good. So I've sat there, and let's say this was the only transaction that affected this government for the whole year. They had $1,000 cash. That's all they had was $1,000 cash, no liabilities, and they spent the entire $1,000 on equipment, right? Okay. So when I go to prepare the balance sheet for my general fund, what should I put down as cash? Cash is zero. I had $1,000 cash. I spent it all on equipment, right? Okay. I'm telling you that there were no other current assets, and I'm telling you that the current liabilities are zero. Just making that up. So my fund balance has to be what? Not a trick question. Zero, right? Okay. Okay, good. Now, I want to prepare my government-wide now, and now I'm going to prepare my statement of net position, S&P, we'll call statement of net position. How much cash am I reporting? Cash is zero. I had $1,000 cash. I spent it all on equipment, right? But now, because I'm in government-wide statements, I'm using full accrual accounting, right? So I'm going to have to report this equipment of $1,000, right? Okay, good. Now I'm telling you there's no current liabilities, so I'm just going to put that my liabilities are what? Zero. So my net position then is how much? My net position is $1,000, right? Okay. Now we have a little problem because what? Somebody is looking at my government-wide statements under my governmental activities column and they're seeing 1,000. They're looking down at my governmental funds and they're seeing that what? There's zero in fund balance, right? So what we do, what we're required to do is prepare a reconciliation, okay? And as I said, there's two of them. I'm just calling this Recon 1 for our purposes here to understand. This is a reconciliation of the balance sheets, okay? And so what will happen? I'm going to start with fund balance. What's my fund balance? Fund balance is zero. And I'm going to reconcile to what? Net position. My net position, you can see here, is 1,000, isn't it? Okay. And so I just need to show on this reconciliation, how did I go from zero fund balance to $1,000 net position at the government-wide level? And I'm simply going to do what? Call out that I have equipment, and I'm going to sort of say it like a Neanderthal man here, equipment. They'd probably say, equipment is reported at the government-wide level, but not at the individual fund level or modified accrual accounting versus accrual accounting, whatever. They'll explain it, and then they'll put a plus for that $1,000. Does it add back? Does it reconcile? Okay. So this is what our reconciliations do. Now, what would happen if I had some long-term debt of $500? if I had long-term debt of 500. Would I report that long-term debt on my statement of net position? The government-wide level? Under full accrual accounting? Yes, I would. So I would report what? I would report now a long-term debt here, and I'm just going to say that my long-term debt is, say, I'll just make it up, say it's 400. So if my long-term debt is 400, now my net position is what? On what planet? Now my long-term debt is what? Is 600, right? Assets minus liabilities, give me my equity, is 600, isn't it? So now the number over here is what? Is not 1,000, but is 600. But that's easy. On the reconciliation, I'll just call out that long-term debt, right? And again, I'll say something more than long-term debt. I'll say it's reported at the individual fund level, not reported at the individual fund level, but reported at the government-wide level, right? Yeah, I'm sorry, 400, yes. Thank you. Right? Okay? That's the way the reconciliations work. Okay? Now, the one that I'm going to show you here from some of our slides that we had in our earlier chapters, I think it's chapter 1 or 2, I forget which one. I didn't show it to you at that time because we weren't quite ready for it yet. Okay? But now we're ready, that we've been through all of the differences between the individual fund and the government-wide statements. So now we are ready, assuming my computer's not going to decide to pull a lockup on me here. There it goes. Okay, and let's just go ahead and let's take a look, and this goes back to chapter 2, where we had the examples of our financial statements that we were working with back there. And let's just go ahead and take a look at our government-wide statement of net position, government-wide balance sheet, right? Statement of net position, and we have what? Governmental activities and business type activities. We know that in our governmental activities we have what? GRAS, the general fund, special revenue fund, debt service fund, what? No, I can't remember. General fund, special revenue fund, debt service fund, and what? Capital project fund and permanent fund, plus what? Plus the internal service fund, right? Which is the S and C PAPI. Okay, good. Oops. It's haunted. Okay, it's recording anyway. I thought I deleted that, but I guess I just deleted the audio. So I'm going to have to do this outside of slideshow, unfortunately. I guess I'll discard that mess. Okay, so let's see if I can make it a little bigger by doing this. Okay, so I guess I'll have to do it that way. Okay, so I have what? I have my internal service fund, my enterprise funds in the business type activities column, right? Okay, now when you take a look here and you come down to the bottom of my business type activity column, do you see this number right here, 3522600? Okay, that's my what? That's my total liabilities, which is not the number I wanted. I want this number right here. This 1,835,000 is my total net position for the total of my enterprise funds, right? Okay, so I come down and I get into my, and now I'm down on my proprietary fund statement of net position. And notice they have two enterprise funds, water and sewer and parking facility. And so when we add up the totals there, and you come over to the next page, and we get to the what? We get to the net position. Is that same number, 1,835,000? I can't circle it because my pen won't work when I've used this squeezing thing of making the screen bigger. But you see that's the same number, isn't it? Okay, so when we get back up to the government-wide level, indeed what? We did roll up our enterprise funds under that business type activity column, didn't we? And that was a piece of cake for us because they're both using full accrual accounting, aren't they? Now, if we try the same thing with the governmental activities column, and I'm going to come all the way down to my net position is 3,730,000. See that number? Can you see my cursor up there? See that 3,730,000? Okay. Okay, good. So now what? Now I come over and I'm coming down. There's my proprietary fund statements that we were looking at a minute ago. But now I have my governmental fund statements, don't I? My general fund, special revenue fund, debt service fund, capital product fund, etc., right? Okay, and I come all the way down to my fund balance down here. Do you see where it says fund balance? You see that number 4,195,000? Is that the number I'm looking for? That's not the number I'm looking for, right? Okay, and so what's happened? I'm using full accrual accounting at the government-wide level when I'm using modified accrual accounting for these fund statements, don't I? So I go ahead and I prepare my reconciliation, and hey, the numbers are bigger, but the logic is the same. I'm going to start with, remember that 4,195,000 is not the number I'm looking for. I'm looking for what? 3,730,000. Okay, and so what do? I go ahead and I add in the assets. I do what? I subtract out the long-term liabilities, right? But remember, at the government-wide level, I'm including the internal service fund as a governmental activity, right? So notice for the internal service fund, I pick up their net assets and add that to my what? To my fund balance, so that it'll match to the total net position that's being reported under the governmental activities column, because the internal service fund is in with the governmental activities, isn't it? Okay, so if I go back to my proprietary fund statement and I just look at my what? At my internal service fund column right here, going over to the next slide, isn't that the net position of the internal service fund, 163,000? So I pick that up and I add it in to my fund balance down here in this reconciliation, because I've included the internal service funds, what? With my governmental activities at the government-wide level, right? So I just add in the net assets of the internal service fund, and then this 125,000, all that is, guys, is a add-in, because this example was assuming that there was a difference between our revenue recognition using modified accrual and our revenue recognition using what? Using the full accrual. Apparently, we must have had something that fell outside of the 60 days. It wasn't included as a revenue at the individual fund level. We would report it as a receivable and a revenue at the government-wide level. So we're adding back that receivable, essentially. Okay? And when we go ahead and we do all those things, this thing reconciles up to that amount at the government-wide level. Okay? That's the logic behind these reconciliations, and the reason we didn't talk about it sooner. If I talked about it in the first class, you'd be like, what difference in revenue recognition? What do you mean we don't record assets at the government-wide level? What do you mean the internal service fund is reported as a government item, but it's a we wouldn't be ready for all that, right? So this is why we have to do it at this point. Okay? Even though that example was back in chapter 2. Okay, now we come over and we're kind of on the cusp of getting into practice midterm mode here now. But the first thing I started you out with is a couple of example problems from the for the reconciliation. Okay, so let's just go ahead and let's take a look at this one. Okay, good. And so they tell us here that we have our what? Fund balance of $6,550,000, right? Now, when you get that fund balance of $6,550,000, it is my recommendation that you always start out putting in that fund balance. 6 million, what is it? 550,000? Okay, and you look at this problem, this 6,550,000, and then you come down here And you notice that they're going to ask me the net, it's net position, guys. Sorry, this is an old question. Net position, they used to call it net assets, at the government-wide level. So they're asking me to reconcile to the net position. Aren't they asking me for the reconciliation here? Isn't that what we do? Okay. And so now I just need to read this thing and see what I should do with these different things. And so capital assets using governmental activities, should I add that? The assets I'm going to add. What's that? How much is it? 2 million? Okay, good. How about the accumulated depreciation? Accumulated depreciation, I need to include it now because what? I report accumulated depreciation at the government-wide level, not at the fund level, right? But accumulated depreciation is subtracted from my assets, isn't it? So I'm going to go ahead and subtract my accumulated depreciation, 500,000, so that I get my, I'm just trying to get to my assets net of depreciation, right? You don't know how wonderful it is to just say that and you know what I mean right after just teaching the introductory. Everybody would be like, oh, well, no, you're supposed to add it, right? No, subtract it for the accumulated depreciation, right? Okay, good. Okay, then what? Then I have this long-term debt. What do you want me to do with the long-term debt? I'm going to subtract it to get to my net position, right? At the government-wide level? Because I wasn't reporting long-term debt at the individual fund level, but I do report the government-wide level, so I subtract that. Okay, so that's going to be subtract. Then what? Then they give me my internal service fund net assets. What do you want me to do with that? I need to add that internal service fund net assets because what? We just take them as they are because they're using full accrual accounting, but we have to add them into my fund balance because it's what? It's a proprietary fund at the individual fund level. It's a governmental activities at the government-wide level, right? Okay, so I go ahead and I add that in. What's that? 200,000? Okay. And then they say to me, well, you have these proprietary fund net assets. What should I do with that? Ignore it. They're including the enterprise fund in there. In fact, I can tell you the enterprise fund's got what? 7 million, now I crossed it out, 7 million, what, 300,000 of net assets because both my internal service fund and my enterprise fund are proprietary funds, but I don't want to add the enterprise fund in here because the enterprise fund is a business type activity, isn't it? So I would ignore that. Okay? And then they give me the fiduciary fund. What am I supposed to do with that? Ignore it. Where's my PAPI? PAPI is not reported at the government-wide level, so I ignore that as well, right? So these are distractors here. Okay? So I go ahead and I add all that up, and I should get choice A here, which is 5,755,000. Right? Hello? Is that a confirmation of that? Okay. All right. Now there's also a second reconciliation, which reconciles the income statement. So if this reconciles the balance sheet, we're going to reconcile the income statement as well. So we're going to reconcile our modified accrual net income number, reported on our statement of revenues, expenditures, and changes in fund balance, to our full accrual governmental activities net income number, which is reported on the statement of activities, right? And we call one the change in fund balance, we call the other one the change in net position. Okay? So you don't want to start sleeping, you know. Let the hand get past 6:30 before you start sleeping, right? I mean, if you're sleeping at 6:24, I got to assume you came here to sleep. Okay? All right. So you come over and you take a look at this, right? And what? We've got these change in fund balance. and we're going to reconcile the change in fund balance to and the question asks me what? What is the change in, and again, it's net position. So I'm reconciling my net income numbers, right? Right? Okay, so change in fund balance, I'm going to start out with is what, 600,000? Okay, what do you want me to do with the capital outlays? Capital outlays, the money that I spent on equipment all year, I've been debiting expenditure, haven't I? Is that what you're supposed to do under full accrual accounting? On what planet? When you purchase equipment, I got you so tied up in governmental accounting you can't remember your commercial accounting anymore. Under full accrual accounting, when I purchase equipment, I don't debit expenditure, do I? I mean, at least not since the 1850s. You know, before they capitalized assets, they just expensed everything. They started, and the reason I point out the 1850s, whatever, when they started to build the railroads, that's when they started to capitalize assets because nobody wanted to invest in, did I tell this story already? Nobody wanted to invest in railroad building companies because they were hemorrhaging green. They were showing these huge losses. Meanwhile, they were building this fabulous capital asset. Well, depending on who you're talking to. If you're a Native American, it wasn't so fabulous, right? Because it's going to roll over on you in a minute. But what? And if you're a buffalo, you really don't like it, right? But what happens? We're sitting here and they're creating this, you know, significant, let's put it that way, asset that's going to go all the way across the country, right? And so what happens? They got the idea at that point that they should capitalize assets so that they're reporting that future economic benefit, right? Okay, so assuming it's not 1850, under full accrual accounting, we should be capitalizing assets, not expensing them, right? But under modified accrual, we expense them, right? So those amounts that we spent for the period, we need to do what? We need to add those back, don't we, to get to our correct net income? Think about it. If you were asked to correct a financial statement where the client did what? They expensed to purchase the fixed assets, and you were trying to get the net income correct. If they subtract that as expense, you'd add it back to get to the net income correctly, right? Okay? Okay, good. Then you come down, and we have this debt service expenditures for principal. Is the payment of principal on debt an expenditure under full accrual accounting? On what planet? When you pay principal on debt, that's a what? Debit to the liability, a credit to cash. That's a balance sheet transaction, isn't it? When you pay debt? Okay, it doesn't hit the income statement, but when you pay the principal on debt under modified accrual, we treat it as an expenditure, don't we? So we got to add that back, don't we? So that's what, 100,000? Okay, how about the interest? Leave it alone. Don't worry about that. Interest is an expenditure both under modified accrual accounting and full accrual accounting, isn't it? Hello? Right? So leave that alone. Then what? Then proceeds from issuance of long-term debt. When you issue long-term debt under full accrual accounting, you better know that you do what? Because it's going to be on your exam, not only from the standpoint of the reconciliation, but in general. You debit cash, you credit other financing sources. Other financing sources is like a non-operating revenue, isn't it? So it increases my fund balance, right? If I'm using full accrual accounting, that's not like a revenue, that's a what? Liability, right? The whole transaction on the balance sheet. So I better do what? I better subtract that, right? That shouldn't be increasing my net income. That's an issuance of debt. That's not another revenue. But under modified accrual, we treat it as another financing source. Okay, good. What do you want me to do with the net revenue, which is like net income from the enterprise funds? Ignore it. We're doing what? We're reconciling fund balance for the governmental funds to governmental activities, the enterprise funds, and the business type activity column, isn't it? So I ignore that. How about net revenue from the internal service fund? That I add back because I'm trying to get to my net income for my governmental activities, and my internal service fund is part of my governmental activities, isn't it? So I put that back. And then down here, which bugs me that they stick this down here like this, because that's just begging you to miss this, but then they report my depreciation expense. Do I take depreciation expense they inform me about the depreciation expense? Do I take depreciation expense under modified accrual accounting? No, I do not. Do I take it under full accrual accounting? Yes, I do. So I'm going to go ahead and do what? Subtract my depreciation expense for the period. And when you do all that, somebody tell me what you get, because I think I cut off the answer here.
$458,000.
Huh?
$458,000.
$458,000? Okay, and you're just going to have to trust me that that's the right answer, because I cut out the answer for some reason. It takes a little bit of, I know. It's so exciting when you get the answer and you can see it there, but trust me, that's the right answer. Okay? Okay, so we have two reconciliations. One's the balance sheet, one's the income statement, right? Okay? And that first little one that I showed you is pretty much about as complicated as it gets here, isn't it? I mean, I think the only thing that added in was we brought in the internal service fund, whereas we didn't worry about that for that first little example I gave you. Okay? Okay, good. So with all that, what I want to do is go to the very last question of the practice midterm, all the way down to the last question. And then I'm just going to let you work the rest of it on your own. No, just kidding. That's not funny, John. Okay, so you see this one down here? Everybody find this one? It's like the very end. Huh? Yeah, that's a good point. Well, it looks like I'm going to have to come up with what? With the net position at the government-wide level, right? Okay. So if I'm coming up with the net position at the government, it didn't ask for anything? Well, it's just a very, passive question. There it is right there. It gives me the choices though, right? So my choices are net position. I'm trying to come up with net position. In other words, keep doing something till you get one of those answers. Okay. All right. So let's go ahead and let's see. Can I get there? Can I get to any of those numbers? How about if I start out with fund balance is what? Fund balance is how much? $5 million. Okay, good. What do you want to do with these capital assets? $2,375,000. If I'm trying to we'll assume I'm trying to get down to net position here. Huh? Good. I'm going to add those assets, $2,375,000. Okay, good. How about the accumulated depreciation? Subtract the accumulated depreciation, $425,000. Good. How about long-term debt obligations? I'm going to subtract that to try to get to my net position, right? Hoping that that's what this question's asking me. Okay. How about my proprietary fund net assets? Ignore that because what? That's too broad, right? But I do want to pick up what? The internal service fund net assets, yes, because that is reported in the governmental activities column, isn't it? Okay? And not in the governmental fund category at my individual fund statement level. So I go ahead and I add that. How about the fiduciary fund net assets? It's supposed to be net position, guys. This is an old question. They changed the name. Why they bothered to change it from net position to net assets is just a dorky Gatsby fetish. Okay, but what do you get when you do the math on that? $3,625,000, you say? Is that one of the choices? Good. Otherwise, I was going to have to say I have the flu and I have to go home. Just kidding. That's not funny either. Okay? Okay, so that's how you're going to work reconciliation questions. Okay? You'll get something similar to those three that we saw. Okay? Any questions on the reconciliation? Okay, good. So let's go ahead then and come back up. Now. And from this point on, we're just going to be going through practice midterm questions. Your midterm is going to be what? On next Wednesday. Now, if Trump gets elected president, I won't be here. No, just kidding. That's not funny either. On two fronts, that's not funny. Okay. I was feeling good about the whole thing for a minute, and now they got me worried again. Okay, so let's go ahead and let's take a look over here, starting with what? Starting with number 2 here, right? Okay, ready? Oh, is there a number 1? Okay, we'll start with number 1 then. That usually makes sense. Okay, so let's start with number 1 right here. Okay. And let me put it back in pen mode. I always forget my mouse these days. I have to fight with this thing. Anybody got a mouse they can spare? No? Okay, so what's happening? We come over and we say when capital assets government unit represent the acquisition of general fixed assets, the acquisition should be reflected in the fund financial statements, and when we acquire it, it is what? We acquire it under a capital lease. Anybody got the journal entry for me when you acquire equipment out of a fund using capital lease? You're going to have to know this, guys. I've got a little bit of a capital lease fetish. When you acquire a capital lease out of a governmental fund. Don't look in that book. Don't look in those notes. It's not in there. Did you hear about this kid that was playing soccer and he got kicked in the head and he started speaking Spanish and he'd never spoke Spanish before? This is a true story. Okay? And so, you know, the thing that I was listening to, the point there was that there's things in your head that you just don't even know you have that information, right? So your job is to what? Learn how to access it, right? And you sit there and you keep looking at them notes. Man, we're past the note stage, okay? We're now acquiring things that are in our head. What we have to practice here is how to get it, right? Okay, so it's not in your notes, it's not in your books, it's in here, which is where it needs to be. So we just want to sit here and figure out how to access it, right? Okay? So, when we purchase equipment under capital lease using full accrual accounting, what do we do? When we purchase equipment? Huh? Well, that's fine for modified accrual, which is what this question's asking, but I asked you. So maybe the way you access information in your head is by ignoring what I say. Okay, I said if we purchase equipment using full accrual accounting, what do we do? Did I say modified? When we use full accrual accounting, what do we do? Oh, when we acquire equipment using full accrual accounting, we have to debit equipment and we credit the obligation on our capital lease, right? Okay. So, if we acquire equipment in a governmental fund, what do we do? Debit expenditure. So, since we're acquiring equipment, aren't we? But we don't record equipment, we know there's going to be a debit to expenditure for this thing, isn't there? Okay. Okay, good. And when we issue long-term debt under full accrual, we have to credit capital lease payable or something like that. But for modified accrual, we don't have any long-term debt, right? So when we issue long-term debt, we credit other financing sources, don't we? Okay, so we go ahead and we credit the other financing sources. And I'm just going to put some numbers here. I don't know. Say it was $100,000 was the present value of the minimum lease payments, right? Isn't that the journal entry? Okay, so is it true that we would do what? Debit both expenditure and other financing sources? Right? Okay. Okay, good. Come over. By the way, don't go play soccer tonight. You know, my teacher told me that if they kick me in the head, I'll do good on my midterm. Okay. All right, so come over. By the way, he only spoke Spanish at first he could only speak Spanish, then he could speak English and Spanish, and then he could only speak English again. So for whatever reason, it doesn't stay, so don't try that. Okay, all right, so we come over and we say that what? The following equity balances are among those maintained by Coal City, and they tell us that the enterprise fund has an equity net position of $1 million, and the internal service fund has a net position of $400,000. So the total proprietary equity is what? $1.4 million, huh? $1,400,000, right? Now this one is simply testing. Do you know the definition of proprietary funds? This is back to grass, seed, pappy, isn't it? Okay. Okay, good. Come down. From city. Did we have one of these as the homework question? This looked familiar. I couldn't remember if we had this as a quiz question or not, but it won't hurt us to review it again. From city issued a 20-year office property lease for its general fund. Frome could terminate the lease at any time, giving 1 year's notice, but termination is considered a remote possibility. The lease meets the criteria for here we go. We got a what? Capital lease. And what is the effect of the lease on the asset amount in Frome's capital assets and the liability amount in Frome's governmental activities column on the government-wide statement? So we've got assets and liabilities. Do we report those at the government-wide level? So when we issue a capital lease, here we debit equipment. Do you guys mind if I sit down? This whole leaning thing is like, I've had to lean before, I can't believe the Raiders lost. Give me another beer. I've done that before, but I prefer not to sit here and lean on this thing for 4 hours while I'm sitting, or however long I'm doing this while I'm writing. The 4 hours is at the bar. We won't take 4 hours here. Okay, so what happens? I'm going to go ahead and I'm going to debit the equipment for whatever the amount of the lease is and credit what? Credits the liability obligation, right? Okay, so I'm just going to put liability down here. So that means both what? Both the asset and the liability will increase? Okay? Okay, good. Come over. Let's take a look at number 4. Using the same facts, not from question 19, now from question, 3? Obviously, I lifted this out of somewhere else. Using the same facts as question 3, what would be the impact on asset and liabilities if we're in the capital project fund? Capital project fund is a governmental fund, isn't it? Governmental fund uses modified accrual accounting. Under modified accrual accounting, when you purchase an asset under capital lease, you debit expenditure, you credit what? Other financing sources, right? Neither is an asset nor a liability, right? So the answer is no effect, no effect. Okay, good. Let's take a look at this next one. Stop me if there's a question. Eureka City issues a statement of cash flows for which of the following funds? Who prepares a statement of cash flows? Proprietary funds only, right? The what? The internal service fund, the enterprise fund? Nobody else does, right? So the answer is what? Capital project fund is a no. Enterprise fund is a yes. What if I decide to add a column over here and I say the motor pool? That says motor pool. What type of fund is a motor pool? Who gets brought to the motor pool? It's an internal service fund, right? As we bring, this is a police car. That's the lights going on, right? Okay, so what happens? They bring the city vehicles to the internal service fund, don't they? To the motor pool internal service fund. So for that one, it'd be what? That would be a yes, because that's a proprietary fund, right? Okay. Okay, good. How about this one? Bay Cities uses the purchase method to account for supplies. Remember, guys, we didn't get that in chapter 4, so we're pulling it into this chapter. So this is a chapter 4 issue. Okay, but we studied it, and the main thing you want to look at is that in-class inventory example, and I lectured on that as part of the chapter 5 material, I think. Okay, it's posted up there somewhere under either chapter 4 or chapter 5, I forget which, but it'll say on there inventory and chapter 5 or something. Anyway, it's in there, and there was that in-class example. And we say that during the year, they're using what? The purchase method? And if we use the purchase method, what do we do when we purchase inventory? Under the purchase method, huh? We treat it as expenditure, don't we? Okay, so if they purchase inventory for $600,000, they should debit expenditures for $600,000, right? And credit what? Vouchers payable, cash, whatever. Right? Okay. And then when the city uses that $400,000, what do? As they use it. As they use it. Huh? Good. Who said that? As you use it, there's no entry, right? Good job, whoever, I can't see. Oh, okay, good job. Now I can see. My glasses, I can see fine when I read, and then I look out there and I'm like, where'd everybody go? Okay. So what happens? We have no entry. Now what about at the end of the year? No, not unassigned. No. The end of the year, do I have to create the inventory account? Do I have to report the inventory account? I have to report the inventory account, don't I? So I'm going to go ahead and I'm going to do what? Debit inventory? For what? I guess 200,000 would be left since they used up 600,000? I mean, since they bought 6 and they used up 4? Okay, what's the credit to? It's not unassigned. It's non-spendable fund balance. Good. I credit non-spendable fund balance, right? Right? So this question is like right out of that example, isn't it? Credit that for 200,000. Isn't this question right out of that example? Okay. So the answer here is what? Debit the expenditure, and then later you're going to have to credit the supplies inventory for 200,000. Now, all I need to do, I love a question like this, is sit there and I'll change supplies inventory to non-spendable fund balance. And I'll still get the right answer here, right? That's how I'll test this. Okay? Question? Okay, what if they're using the consumption method? You want to do the same facts with the consumption method before you do this next question, or you just want to jump to the next question? Let's do this same facts and then we'll do the next question, okay? So who wants to help me with same facts, new question? No, what? Consumption method. We're using now the consumption method for the same facts. Debit inventory for 600,000, right? And credit vouchers payable, just to keep it consistent. Could be cash, but we'll just keep it consistent with the previous example, right? Now we use it and they tell us we use 400,000. Huh? Good. Debit expenditure for 400,000, the amount that we used, and credit the inventory for 400,000 because we're using that up, aren't we? Now at this time, the inventory account has what? Just teeing it up here. The inventory started out with 6. And we just credited it for 4. So it's got a balance of 2, which is what I wanted to have a balance of because that's what's left, isn't it? Right? Okay. Now, theoretically, I don't have to do anything with the fund balance because what? If we're using the consumption method, we clearly have a perpetual inventory system because we're updating inventory when we purchase the inventory and when we use the inventory. So we have a perpetual system, and theoretically, I guess, or practicality, or no more as a practical matter than a theoretical matter, the system should have been tracking with my fund balances at the same time, right? So when I bought the inventory right here, I'm just saying that under the consumption method, I would have done what? I would have debited non-spendable fund balance. Not debited, non-spendable. I would have debited what? Unassigned fund balance for, well, no, at the beginning, for 600,000, and I would have credited the non-spendable, right? For 600,000. And then as I use these things up, I would have done what? I would have debited expense, credited the inventory, and then the system at the same time would have done what? Then gone back and debited the non-spendable for the 400,000 and credited what? Credited the unassigned for 400,000, right? So that at the end, isn't the unassigned showing the 200,000? I mean, excuse me, the non-spendable showing the 200,000. So it's matching what's in the inventory account. Those have to match. Okay. Now look, if the system didn't do that, if the system didn't automatically update the non-spendable, then all I'd have to do is credit the non-spendable for 200,000 and do what? Debit the unassigned for 400,000, right? Right? And that would have what? That would have put it back as well. That would have put it into the unassigned as well. Okay, so I could have done that as well. Okay. All right, so we come over and now you can look at number 7. who wants to do 7? Purchase the supplies on the consumption method. Journal entry for the purchase of the supplies. Debit inventory for 450,000. Credit the vouchers payable, right? Okay, then what? We use 300. So I'm going to debit expenditure for 300,000 and credit the inventory, right? Now, when I purchase the inventory, I would have had this debit for 450 when I bought it, right? And then I just credited it for what? 300, so it has how much left? 150. Okay, is that the answer? Okay? Okay, good. The city of Hiawatha issued 10 million term bonds on April 1st, 2014. The bonds bear interest at 6% due and payable on October 1st and April 1st. So they issue the bonds on April 1st and they're going to pay some interest, what? October 1st? Okay? And then again April 1st of the next year. Assuming the city maintains its books and records in a manner that facilitates the preparation of fund financial statements. Now, what that means is what I've been, this particular source of this question was accepting what I was saying, which is what? You prepare your statements using fund and then you convert them to government-wide, right? So they're not telling you what exactly, you know, or you're accounting for things in the debt service fund using modified accrual accounting at the fund level. That's what they're trying to say to us? Okay, so we're using modified accrual accounting at what? At the debt service fund level, right? So what is the appropriate entry on June 30th, 2015? June 30th, 2015 is their year end, their fiscal year end. So they must have paid interest on what? They must have paid interest on April 1st, 2015, right? Right? Okay. So what should they do at June 30th, 2015? They issue the bonds April 1st. And they make, and this is 2015, and they make an interest payment on what? On what? 10/1/15. I don't have to put 15 because I'm under 2015. 10/1/15. They go ahead and they make a payment of 6% of $1 million is going to be, but it's 6% semi-annual, so they pay 300,000 right there. I guess they issue the bonds, what, 2014? Okay, but in 2015, they do what? They also made a payment of 300,000 right here, didn't they? They pay this interest every 6 months. And then there's another interest payment coming, what? 2016 in April? Right? Okay, but this question is asking what should they be doing right here at June 30th. June 30th, they don't have to do anything. This problem is trying to trick you into thinking that you would accrue interest for what? April, May, June, those 3 months? No, we don't accrue interest, right? We'll just simply take, under modified accrual accounting, we'll simply take that entire amount as an expenditure, what? next year in June in the next fiscal year when we make that full $300,000 payment, right? Right? Okay. So let's take a look at this one. On July 2nd, April 15th, Banker County issued $4 million of term bonds that bear interest at 6% semi-annually each January 30th and July 30th thereafter. And they tell us funds needed to pay the January 30th interest payment will be transferred from the general fund to the debt service fund on January 15th, 2016. At December 31st, 2016, what amount of debt service fund should we recognize as debt service fund interest? So what's going to happen? 2016 we're talking about now, right? Okay, and in 2016, they're going to make a interest payment on January 30th. And then they're going to make another interest payment, what, on July 30th? And then we have December 31st as the year end. Right? So, if they issued the bonds on July 30th, 2015, then 6 months went by here, didn't it? Didn't 6 months go by between the date that they issued the bonds in 2015 and January 30th of 2016? And this question is asking me about 2016. So that means that there was $4 million times what? 6% times 1/2 for half the year. That gives me what? 120,000. So they make that payment during I guess it's a calendar 2016 because it goes from January to December, doesn't it? So there's that 120,000, and then they're going to do the same thing 6 months later on July 30th, aren't they? So they're going to go ahead and do what? Another 120,000, right? Now December 31st comes, but that next payment's not over here until 2017, right? So since that next payment's not until 2017, I'm not going to count it as a 2016 expenditure, right? So I only count these two. That's 240. Right? Okay. What if I'm doing this same thing at the government-wide level? What would you want me to do at December 31st? Huh? The interest what? Very good. I'm going to do the 5 months from what? August 1st to December 31st. I'd have to accrue up that interest, wouldn't I? And what? And then the first half of the year, it's only going to be the amounts from January 1st to what? To January 30th, whenever. Okay, for that first month. So that will end up giving me a full 12 months, won't it? So the answer is actually the same thing. Only difference is that what? Some of it is accrued on the back end of the year, and some of it is what? Of that first payment wasn't part of the 2016 money, it was part of the 2015 money, right? But you get the same answer. You lop off a month at the beginning and you add in 5 months at the end, you end up getting the same answer. Okay? Okay, good. Come in and not lop off a month at the beginning, you add a month at the beginning and you add 5 months at the end, right? Or you could say you lop off 5 months at the beginning and you add in 5 months at the end. I guess you could look at it that way too. Anyway, it's the same answer, right? Okay? There's questions, guys. I mean, sitting there in confusion and saying, I have no idea what's going on, is going to pay you zero dividend, because no one's going to have any sympathy for you. No one's going to sit there and say, oh, that must have been really painful for you. So if there's something that you don't understand, now would be a good time to ask it. Okay? All right, good. Let's go ahead. Let's take a look at this one. And what entry should we make when we receive billing from a contractor in our capital project fund? Debit the expenditure, credit the accounts payable. Remember, we went through that long example of the capital project fund, didn't we? I don't know if it was long, but it was a detailed example of the capital project fund. That comes right out of that example. Okay, good. Come down. Avon City issued bonds for the purpose of financing a major capital improvement. Which would you report this in? This is the job of the capital project fund, isn't it? Accumulates the resources that are used for capital improvements and then it spends them. Okay. 6 years ago, Hill issued $10 million of 6% term bonds due 30 years from the date of the issue. Interest on the bond is payable semi-annually, July 1st and January 1st. Hill City has a September 30th year end. What should we do at September 30th? Nothing. We don't accrue interest in between interest payment dates, right? Okay, good. Which of the following is a reconciling item between the fund level financial statements and the government-wide? Here we go. This is a reconciliation question, isn't it? Okay. Theoretical one. And what? Reporting depreciation expense rather than capital outlay for expenditures. Weren't those adjustments? We did what? We added back the capital outlays, but we subtracted out the depreciation expense. Remember, I didn't like the way they had the depreciation expense one hanging down there like that? Okay. If a government uses modified accrual accounting for its infrastructure assets, not modified accrual accounting, modified what? Modified approach. Which of the following items properly will not appear in the government-wide statements? Depreciation expense. If you choose the modified approach for your infrastructure assets, you don't have to take the depreciation, right? Modified approach. Okay, good. Stone Corp donated. You guys need to take a break or what? Okay, Carolyn, you'll be in charge of telling us when, but don't get filled with power, okay? Okay, so what happens? We sit here and we look at Stone Corp donated investment to Pine City and stipulated that income from the investment be used to acquire art for the city's museum. So what happens? We're going to use the income from the investment and donated investment and stipulated the income from the investment should be used to acquire art for the city museum. Well, and they should have said and maintain principal. Huh? Did they say that? They should have said, maintain the principle. Because if they say that, then what? Then this is clearly, oh, come on. Then this is clearly a permanent fund, because that's what we do in a permanent fund, right? Now I look at the rest of these. Yeah, this is problematic. Well, no, because donated the investment, a special revenue fund doesn't get its money from donations. It gets it from what? From revenue. But this could kind of be private purpose, right? To a certain extent. So I don't know. They better had said this and maintained principle. Would have made this a better question. Huh? Yeah, donated an investment. Yeah. So I mean, it is the permanent fund, but it's not written. It's not the best writing of a question. I don't know why they're. Huh? You what? It's right, but I don't like it. Think we can be clearer. Okay, we don't need to get tricky on this. Okay, I'm much more interested in giving you direct questions that have directly tested what we've studied. And the way we studied the permanent fund is what? You maintain the principal and you live off the interest, right? So, question that I give you, and I think what happens is I struggle for decent permanent fund questions because I don't see a lot of them in test banks. So I'll look for a better one for you than that one. I don't like that question. Okay, number 16. A state had general obligation bonds outstanding that require payment of interest on July 1st and January 1st of each year. Debt payments are made from the debt service fund. The fiscal year end June 30th. The fiscal year end June 30th, 2014. I don't know what that sentence is doing there. I don't understand this sentence. Which of the following accounts would have decreased when the state paid the interest on July 1st, 2014? Would I decrease interest expenditure? Would I decrease it? No, I'm going to increase interest expenditure, right? Would I decrease interest payable? I wouldn't do any increase interest payable. Decrease interest payable. I wouldn't do anything with interest payable because I'm probably going to credit cash, right? Okay. How about interest expense? The interest expense doesn't exist if I'm down in the debt service fund, right? Is that where I'm at in here? Yeah, debt service fund. We call it expenditure, don't we? Fund balance will decrease by virtue of the fact that I have increased my expenditures, right? Right? Okay. Now you get there, and this is kind of a confusing question, but you could also get there through process of elimination, right? Using the same facts as question 20, what account would have decreased as a result of the July 1st interest payment? And we're assuming that what? At June 30th, we would have accrued interest, wouldn't we? Using full accrual accounting between the last interest payment date. So there would have been an interest payment date on what? Do they give us the interest payment dates here? Yeah, there would have been an interest payment date on July 1st, right? And then from July to January 1st, I should say, to June 30th, they would have accrued 6 months interest, right, at the government-wide level, if the fiscal year ends June 30th, right? So in the government-wide level, they would have debited interest expense. They don't give me numbers here. And credited interest payable, right? And then when July 1st comes, that next day, but now we're into the next fiscal year, I got to pay that, don't I? So I would debit interest payable and credit cash. So interest payable decreases, doesn't it? As a result of the payment? Okay. Okay, good. Let's take a look at 18. Bay Creek Municipal Motor Pool, where should we account for that? Internal Service Fund? Right? Okay. Carolyn, we're going to take the break after number 20, okay? Because that's going to be the halfway mark. Okay? Okay, good. Halfway mark on the number of questions. Which of the following statement is the most significant characteristic to determine the classification of an enterprise fund? And remember, we said it's an enterprise fund if the fees do what? Cover the costs, or we issue bonds that are secured by the revenue of that activity, right? So if the revenue covers the cost, or the revenue covers the repayment, guarantees the repayment of the bonds that we issued for that purpose, then what? Then that's an enterprise fund, right? Okay, good. Number 20. Oh boy. The City of Barton entered into a 10-year capital lease for office copiers in City Hall at the beginning of the year. Lease payments of $10,000 are due annually at the end of each year. The lease agreement had an implicit interest rate of 10%. The discount rate for the present value of an annuity for 10 years at 10% is 6.1446. What journal entry should be made at the beginning of the year in the government-wide statement of net position if Barton appropriately used the present value of the annuity to record the acquisition of the leased asset? Why is that too much? You have to record it at its present value, right? Present value of the minimum lease payments. And if I tell you the present value of the annuity here is this 6.1446, that's going to give me the present value of those payments, isn't it? Which I can peek down here and see that that's 61,446. And under capital lease accounting, you debit equipment for the present value of the lease payments. You credit the lease obligation liability for the present value of those lease payments, right? Right? Okay. Now, if we're sitting here and we're in the capital project fund, then what? When we purchase equipment, we debit expenditure, we issue long-term debt, we credit other financing sources, right? Right? What happens when we make the first lease payment? Government-wide. How much are we supposed to pay? $10,000 annually? Make the first lease payment government-wide. When do they make the lease payments? Do they give us a date? The beginning of each year. Do me a favor and pretend like it's the end of each year so we can do this at December 31st. Although I think they gave me the present value of an annuity due factor in this problem. So, but I don't want to sit there and say, to make the lease payment they made January 1st, they would have already accrued the lease obligation payable, so we have to liquidate that now. So pretend it's December 31st. I'm at government-wide. I want the entry government-wide. Well, I'm making a payment. Huh? When I make a payment, I debit cash? Huh? Government-wide. Can I start with the credit to cash, please? Will you let me do that? Okay, so credit cash for $10,000. Okay, now what do you want to do? Debit expenditure at the government-wide level? I'm complaining that you use the term expenditure and I'm at the government-wide level. Is that what we call expenses at the government-wide level? Huh? No, I already debited the equipment when I bought the thing. Huh? Well, look, did I borrow money here? Did I borrow money? If you lease something, you borrow money. When you lease an asset, you're borrowing money, aren't you? I mean, you lease a vehicle, you drive off with a $50,000 vehicle, and I guarantee you didn't leave $50,000. Well, you might have, but you probably didn't leave $50,000 behind. I know I don't. Okay, so you borrowed money, didn't you? Okay, so if I borrowed money, do I have to pay interest on it? Okay, and so if the present value of those lease payments was $61,446, then I have to sit there and take that $61,446 and I have to multiply it times what? Times 10% is the interest on that, isn't it? So 61,446 times 10% is 6144. 6144. So I'm going to debit interest expense. I'll put it over here. Debit interest expense. 6144, right? Okay, what else? We need more debit to make this journal entry balance, don't we? Now I'm going to credit the what? Obligation liability? For what? Fix that. Huh? So I'm going to... Okay, so I'm going to debit my obligation. Give me that number again. 3,856. Debit my interest expense. What was it? 6,144. And credit cash the 10,000. Right, guys? Right? Okay. All right. What do you want me to do at the, what is it, the capital project fund accounting for this? Whoever at the individual fund level. Yeah, capital project fund. When we make this payment, maybe it's made out of the general fund, I don't know. But who's ever, governmental fund makes the journal entry, what do you want me to do? Debit expenditure for, huh? How much? Expenditure, you want me to put a label on that expenditure? Expenditure interest, is that what you want me to do with that one? 6144? Okay, what else? Credit cash for $10,000. It's not going to stay. 10,000. Okay, and then what? Expenditure principal, you say? Okay. For whatever the balance is to make this balance to 10,000. What is that? It's up here. 3,856. And that's a credit to cash for 10,000. It will go away. It'll disappear. Okay. All right.
So the $3,856 is that for the expenditure for what?
That's for the full 10,000 that went out. It's all an expenditure. Capital project fund, modified accrual accounting, you spend money, you debit expenditure, don't you? So it's the 10,000 for the money I spent, and the class wanted me to label it. You don't have to, but there's nothing wrong with labeling it the expenditure versus the principal portion. Okay? Question? Let's see. Let's do this 22, because then we'll take the break, because it's saying using the same facts. Oh. Using the same facts of question 24, what journal entry should be made to record the first lease payment? Oh. There it is, right? Huh? What? You talking to me? What? You're talking to yourself, okay. Now you know how I feel when I'm talking and you guys are falling asleep. Okay. All right. Okay. Okay, guys? So let's go ahead. Let's take a quick break before we really are falling asleep. Oh, wait. Sorry. Using the same facts, what is the journal entry at the individual fund level? And I chose to just put the whole amount into expenditure. So we debit expenditure and we credited cash. But you could have called it out by principal and interest the way you guys did, but you don't have to. Okay? Oh, that's a different question, huh? So it's this one right here, right? It's this one? Okay. So when we come back, we'll pick up what? Number 24? Okay, guys? All right, so we'll make it what? 10 minutes or 15?
15 minutes.
We'll make it 12 minutes, okay? 12 and a half minutes. I have one. Question number 24 here. Okay, and City of Barton elects to establish supplies inventory for its copier at the beginning of the year and adopts the purchase method. Copier supplies totaling 5,000 were purchased during the year. 3,000 of supplies were used during the year, and 2,000 of copier supplies remained. You think? Obviously, if they bought 5 and they used 3, there's going to be 2 left. So what should be made? Entry should be made when the supplies are purchased, and if we're using what? We're using the purchase method. We treat that whole amount as an expenditure, right? Okay, right here. Okay, good. And obviously, if it was what? If it was the consumption method, we would debit inventory. Okay? Okay, good. Coming down. Using the same facts, okay. If it was what? If it was the, what journal entry should be made when the inventory is used? No, so we're still under the purchase method. There's no entry, right? Okay, and then we come down and we say, using the same facts, what journal entry would we make at year end? And remember, we have to do what? Okay, this is a nice little question. We have to debit the inventory and credit the non-spendable for the amount that's left, right? Okay. Okay, good. Number 27. A city reported a $9,000 increase in net position in the motor pool internal service fund, $12,000 increase in net position in the water enterprise fund, and $7,000 increase in employee pension plan. The motor pool internal service fund provides services primarily to the police department. What amount should the city report as change in net position for business type activities? How about the $9,000 increase in net position for the motor pool? Motor pools and internal service fund, that's going to report under governmental activities, right? Okay. 12,000 increase for the, in net position in the motor, net position in the motor pool, internal service fund. 12,000 increase in net position in the water enterprise, yes, right? We're going to pick up that one. How about this employee pension? That's a fiduciary fund, right? See how easy this test is? Piece of cake, right? Which of the following funds of a local government would report transfers to other funds as an other financing source? General fund, other financing use. General fund, right? These other funds don't have those because they are either proprietary fund or a fiduciary fund. They don't use the transfer out, transfer in. $29, a city council designates that funds in the enterprise fund be used for future equipment replacement. The enterprise fund should report this as what? It is unrestricted because what? There's no external restriction, right? Remember, for something to be categorized as restricted, it has to be an external restriction, right? We learned that when we talked about our what? Our different constraints on our fund balance, right? We talked about the different constraints being non-spendable, and then we had what? For our spendable, we had restricted, committed, assigned, or unassigned, and only the restricted was external, wasn't it? Now, when we get to the government-wide level, we only have 3 categories of our net position, which is restricted, unrestricted, and invested in capital assets, native related debt. And only those that were also reported as restricted at the individual fund level roll up into that restricted. Everything else gets rolled up into what? Unrestricted, and then we make an adjustment out of the unrestricted into invested in capital assets net of related debt for any amounts that are what? That are related to capital assets against which there is no debt associated with that, right? So we'd have to make that final adjustment. But again, we're not going to get to that level of detail, but it's important to understand that restrictions are only external. That's true at the government individual fund level. That's true at the government-wide level, right? And so and that's why I underscored here that this board of directors are the ones that went ahead and, not board of directors, but the city council is the one who designated that. That's an internal restriction, right? Which means it's unrestricted. Internal designation means it's unrestricted. Okay? Okay, good. Let's go ahead and take a look at number 30. Okay, Roy City received a gift, the principal which is to be invested in perpetuity. What does perpetuity mean? Permanently, forever. Right? With income to be used to support the local library. That is clearly talking about what? The permanent fund. Maintain the principal, spend the interest. And so when I tell my dumb stories about Hayward and that, you want to pay attention, right? We talked about Miss Hayward's and giving them money and they had to live off the principal and stuff. Isn't that really what that's describing? Okay. Okay, good. Come over. Stop me when you have a question. Which of the following funds would be reported as a fiduciary fund? I shouldn't even ask you that question. Note to self, too easy. Japis City issued $1 million general obligation bond at 101 to build a new city hall. Any amounts not used for construction were to be used for the protection of bondholders. At the time of the issue of the capital project fund, owed the general fund $50,000. What amount should the city report as other financing sources? I don't like this question anymore because there's two options, isn't there? Remember we talked about that? Which is to do what? You could take the whole amount of cash and set that up for what, $1,010,000 is the amount because they issued it a premium, 101. And you could set that whole amount up as another financing source, couldn't you? $1,010,000. Or you could do what? Debit the cash for $1,010,000. Credit the other financing sources for just the principal, the $1 million part, and the premium will be due to debt service fund for $10,000. Remember we talked about that? And so, you know, if I didn't give you this one, then okay, and I gave you some other stupid number here, then maybe okay, then maybe B is all right, right? Because you're saying, well, hey, it's got to be one or the other, and he's not giving me an option here that puts the 1 million, puts enough into the other financing sources to be reasonably be the answer. But if I give you $1 million and I give you, you know, 1,010,000, that's not a fair question. Okay? What happens if we do that on the test? I give you an unfair question. I'll add it back. Don't I owe you some from last time? Did we have some bad questions last time? One? 4 points? Okay, remind me again. I'll put it in there eventually. I haven't put it yet, but I'll put it in there. And if I owe an individual question points, tell me. Tell me at the end of the test. Okay, ready? 33. Receipts from special tax levy to retire and pay interest on general obligation bonds is accounted for where? Debt service fund. That's their job, isn't it? 34. January 2nd, City of Walton issued $500,000, 10 years, 7% general obligation bond. Interest is payable annually beginning January 2nd of the following year. So we're going to pay this next year, right? What amount of interest should Walton report on the statement of revenues, expenditure, and change in fund balance for its governmental funds at September 30th? Answer, nothing. Because that payment won't be made until next year, right? Okay. Okay, good. Come over. And if it's the government-wide level, what happens? Set it up for me. 500,000 times 0.07 times January to September is in full 9 months, isn't it? Times 9/12. That gives me this weird number down here, 26,000 something. 26,250. Right? Two different answers. Using full accrual accounting, the government-wide level, modified accrual using the modified accrual for the fund level, full accrual at the government-wide level, right? Question? Okay, good. Capital project funds for a new city courthouse recorded a receivable of $300,000 on a state grant and $450,000 from the transfer. What amount is revenue and what? The state grant is revenue. The $450,000 transfer is another financing source, isn't it? right? That comes right out of that capital project fund example, guys. There's a few questions for that chapter 5 where we went through that whole little capital project fund and we took it from beginning to end. There's a few questions that come out of that. State grant was a revenue. Other finance transfers are always other financing sources, right? So even if you didn't know that the state grant was a revenue, you should be able to answer this question by knowing that transfers, we said it 92 times, are what? Other financing sources, right? Okay. So, what should we report as other financing uses? Transfer to the debt service fund? Okay, payment to a pension trust fund? Remember we said that when we talked about the funds that pay to the pension fund, that's an expenditure to them, isn't it? Right? How about purchase of equipment? We've known for a long time that is an expenditure, right? Okay. So if you look at the way this exam is going here, you can see that what? It's understanding pretty much everything that we talked about, but it's not just, grassy pappy level. We're kind of building up and expecting you to be a little more familiar with some of this stuff, a little more contextual sophistication with this stuff, right? Okay. Okay, good. Come over and let's take a look at this question. I don't like. I mean, I expect you to know that a governmental utility is an enterprise fund. Oh, I see. Then we prepare statement cash flows. So this one I'm okay with. This public benefit corporation, whatever. Okay, I guess. Who knows? I don't know what this thing is supposed to be. And, I don't like these questions that have me guessing as to whether or not something's an enterprise fund or not. I mean, if they want to test that I know whether or not this is an enterprise fund, then they should step up and ask me the criteria. Tell me the criteria. This thing, the cost is paid for by what? By revenue generated from user charges, or what? The revenue, the costs were covered by bonds that were backed by the revenue, and just test me the criteria, right? If they want to test the criteria. So this public benefit corporation's a little vague. Governmental utilities, I would expect you to know that, right? We've talked enough about that. Okay. Shared revenues received by an enterprise fund are considered non-operating. Remember we had the roads, and if it was a toll road, that made it an enterprise fund, right? But remember I said I could also have this little box over here, and this was gas tax. And I said that what? Gas tax, and what they'll do is that comes down from the state, and the state will basically say, okay, Santa Clara County, here's some money for you for your because you are responsible for so much of the 880 or something stupid like that, right? And so they'll give them that much for their share, and then what? Then other gas tax will go to, what comes next, Alameda County, and they'll say, okay, Alameda County, here you go, and you pick up, assuming that we had toll roads, which we do not, but they would sit there and say, you're now county, you're responsible for that part of the toll roads, right? And so they go ahead and they distribute this gas tax, they share those out, right? So the toll road is operating, But this gas tax is going to be what? Non-operating. It's a shared revenue, so it's non-operating. Okay. Okay, good. Through an internal service fund. We on 40 now? Did I skip one? No? Through an internal service fund, New County operates a centralized data processing center to provide services to New's other governmental units. Okay? So this is a what? Internal service fund, isn't it? And so when we have billings are our what? Our operating revenue, aren't they? Right? Okay. Okay, good. Come over. King City Council will be establishing a library fund. Library fees are expected to cover 55% of the library's annual resource requirements. Do I need to keep reading? If what? Fees are going to cover 55%, then fees are covering the majority of the cost, aren't they? And if fees cover the majority of the cost, that's an enterprise fund? Taxes collected and held by Franklin County for a separate school district would be accounted for in our, there's our buddy, the agency fund, right? It holds the money and then does what? Distributes it out to whoever, right? We already did this one? Okay. Okay, so look guys, we're going to get out a little early obviously, and make sure that you are looking at all the practice midterms. Do not limit yourself to this one practice midterm, okay? I know last time it ended up being the same thing. I'm not going to do that this time. So you need to go through all the practice midterms, chapter 5, chapter 6, chapter 7, chapter 8. For the reconciliation, obviously it's going to be the stuff we did here because this was really the only material we had that you should be studying, but you should be going through all of those practice midterms. My advice is if there's something in those practice midterms that you're like, what the heck? Go back and look at our discussion of that. That's recorded, right? Because we went through all those. So you should be able to go to that tape, to that part of the recording, find that part of it, see what we said about it. And if you need to, back up into the slides to look at it. And if you have questions, you know where I'm at. I'm here 3 o'clock on, when is our test? On Wednesday. I'll be here. Okay? Question?
Midterm's going to be similar to the practice midterms, right?
Yes, just like it was last time. In fact, it was exact, but it won't be that exact, much like but it will be, we swallow the same general idea. Practice midterms build you up to the ability to take the test, yes. Okay? All right, guys, have a good rest of the evening, and I will see you next week. Study hard. Hi. I'm sorry, let me put them on. Let us put them on stop here, otherwise they record our whole conversation. I'm gonna get